Namaskar. Hello and welcome to P Guru's channel. Sunday evening, 7 p.m. is Sridhar Chityala time, and he's joining us today to talk about a very important phenomenon that has been happening for a few years, maybe perhaps decades, which has also inflated the stock markets and at least in the United States. Let's welcome Sridhar Chityala ji. Namaskar, sir. How are you?
Namaskar, Ji. I'm doing very well. How are you? How are you?
I'm doing well, sir. As you can see, the yen carry trade. I did one small intro to people or viewers about what is exactly carry trade, how you can do business on interest rate arbitrage, meaning like two different countries, two different systems, huge interest differential, then borrow from the low interest, take the money, go into this to the place where you get high interest, just bank to bank or fixed deposits and make money. That was simple thing, but there's something much more that has happened. Over to you, sir. Today's deck is going to be very interesting. Over to you, Sridharji.
Right. Just can you give me 30 seconds? I'll go off and I'll be back. 30 seconds.
Yes. Please go ahead, sir. Viewers, in the meantime, we just wanted to tell you that we have our singles with enclosure now available for sale. You can ship immediately, and you can see the QR code on the top left, and from there you can get your place your order and go from there. And here is something that I would like to also show, which is, let me see, I'm trying to bring it up, how to auto subscribe. I am trying to do that. Just give me 1 second. It's not syncing. Anytime you want something to happen, demo won't work. But basically, what I would also like all of you to do is to subscribe to our channel, whichever channel you are watching, whether it is English or Hindi or Tamil. And we are on this drive to try and get our main channel to 1 million subscribers. We are around, say, 765, and we've been kind of slowing down a little bit, if you will. We would like to pick up the pace and really need your help. Sridharji, over to you, sir.
Right. Fantastic. Okay, carry trade. I think Sri Iyer has done a phenomenal job on what I call is carry trade 101. So we are trying to answer certain questions which probably is in the back of the mind of many people. Next slide. Is the carry trade, the unwinding of the carry trade, especially denominated with yen? This is also a significant in Swiss francs. Does it carry any risk? Of course, it carries a risk. It carries a shock. Why? Because when there is a rate differential that narrows between the 10-year yen and 10-year US, then automatically the rate differential is what and currency is what defines people to borrow in yen, convert it into dollar, and invest that money. So what is the size of the carry trade? Hard to quantify, but we did a lot of research. We believe the number is somewhere to be between $1 and $2 trillion is the carry trade. That means close to $1 to $2 trillion worth of yen has been borrowed. And if the rate differential narrows, then people are going to sell yen, pay off the debt, and then move it to the US dollars. So that's where you see some absorption or where you see some shocks. And we're going to illustrate what happened in August 2024, how the markets reacted and what turned out to be the cause of the trigger. So where are the carry trades invested? Because of the differential and you need to make money, typically the money that is borrowed in yen, converted into dollar or euro, they either go to tech stocks, they'll go to crypto, because they all potentially generate high yields or high returns. Obviously, they're also directed to emerging markets. I think one of the questions we raised is when $17 billion of investments in the markets, in Indian equity markets left, whether that was a trigger as a result of liquidating carry positions. And obviously, some of it is invested in sovereign debt Is that the one that's causing problems in France? Is that the one that could cause problems in Britain? These were some of the questions that came up. Is this a 2008 type financial crisis? No, this is not a 2008 type financial crisis. This is purely, rebalancing in the markets. It has nothing to do with the economics or the economy or the state of the economy or the environment. So that's just some of the implications as to what you hear from or what you will observe from the yen carry shock. So it's not going to shake the markets. It's not going to shake the economies of the world, but they will obviously, those who lose money and money is taken out of the market, there will be some absorption, but it is not an economic contagion. Next page. Okay, what to watch in the markets? What you will watch is Japanese US dollar exchange rate. The more and more discounting of Japanese yen, that is when it goes into that 155 to 160 dollars Japanese yen for US dollar, that means there is some trouble brewing in the Japanese market. Usually when it is around 140, 145 or 145 to 150, implies that Japanese yen is strong. There are no underlying issues that the Japan confronts. That's one. Second, watch Bank of Japan rate decision. You will see that we'll give you 3-4 rate differentials, and you will see that Bank of Japan has been rising rates. In fact, United States President as well as the Fed have been going in the markets and making a comment. 1 minute, Shriji, making an observation that Japan has kept its rates very, very low, and it needs to do something about it. Yes, Shriji.
Thank you so much, sir. I just wanted to also mention that the recent hike in Japanese bonds to, I think, 3% plus, 3.04 or something like that, was an interesting phenomenon. I think that may have been to try and break this yen carry trade. The interesting thing about it is Japan, I think, has the highest US Treasury bills. It holds close to, if I remember correctly, 1 trillion or something like that, or more than that. The number is not important. What is important is the recent bond sale of the Japanese government. Do you know who bought it? The government itself. 97% of what the government sold as bonds were bought by other departments in the bond, which means there is a small problem Japan has about selling its own bonds to private investors. The other interesting thing is the 1 trillion plus I told you, which is the equity that Japan holds in US treasuries, is not held by the Japanese government. It is held by the private companies. In other words, the private companies of Japan have more faith in the US dollar than on their own currency yen, which is very, very sad. These are some of the facts. Japan needs to have its own people buy its own bonds. This is something that is very, very strange. Strange meaning like people have kind of, they're hedging their bets on the yen. And see, what does this mean? What this means is US dollar is still the reference. It is the king. Guys, those of you who say that Indian rupee will come back to 3 rupees, I am seriously doubtful of that. You cannot let rupee appreciate against the dollar. Sir, my 2 cents over to you, sir. You can add on that, and then we can go to the next topic, US Treasury yields.
Right. So I think just to probably add some more color to Sri's interjection and perspective. Historically, Japan has been one of G7 members, the only G7 from Asia, to be providing liquidity either through corporates or through government bonds in US dollar to stabilize the financial system. Financial stability is managed by G7. This is historical. I know many of you would like to add Russia, China, and India to it. Maybe one day it may happen, okay? But right now, the G7, Japan is one of the financial stabilizers. Now, historically, it has been the Japanese government. But now, with so much of trade happening between the Japanese corporates and in United States. You know, the $250 billion came from not from the Japanese government, but from the Japanese industry. So what Japan government has done is allowed the industry to take more US dollar position, while it in turn, pushing the debt. So there is enough liquidity within the system. The whole liquidity in the Japanese market is more government driven, and it is driven by its reliance on exports because of the yen low end, what you call rate differential with other currencies. Japan has been funded by an export economy with a very small population, also aging population. So Shriar is right, but I won't give negative credit to the Japanese in terms of this fine balance between the Japanese government, buying and creating this liquidity, especially if people want to, pay out yen, there has to be yen available in the market. And of course, corporate exports, and US is one of the largest markets. And you remember, if you look at the tariff decision, it took a fair amount of time, but they eventually got the tariff things right with Japanese industry putting close to $250 billion into the auto market and also into the semiconductor market. But they gave them an open window in terms of where those funds can be directed. And 250 billion doesn't happen overnight, and it's $20 billion a year for a period of 10 years. Some of these things is basically to address the issues around tariffs and the ability of Japan to continue to sustain its exports. But now let's get back to the carry and yen carry trades, which is built on yen. Now you take a look at one slide that we have given. This particular slide is dated January 2024. If you see the 3-year, I've not taken the 10-year, the 3-year narrow terms, the yield differential is about 4%. So in other words, the difference between Japanese yen, if you borrow in Japanese yen, it's $4. If the yield difference between Japanese yen and US dollars is almost 400 basis points, which means it gives a perfect equilibrium or perfect vehicle for many companies or many countries to borrow with a rate differential of 4%, invest it in their respective currency in markets, and as long as the asset growth is greater than that 4%, you are going for a kill. Okay, so this is as early as 4th January 2024. As Japan slowly increased the rates, now you go to the next slide. So if you go shift this 13th August, I have taken 2024. Why? Because something happened between 7th and 13th August. You see the 3-year yield, okay, very important. The spread dropped to 3.43% from 4.09%. Look at the Japanese yen. Japanese yen appreciated. It went to 146.82. In other words, if it was $156, $1 will be able to pay back. You will get 156 yen. In 13th August, not only the rate squeezed, but $1 was only generating 146 yen. That means there's a difference of almost 10 yen to the loan to be repaid. You get less money, and your also yield has squeezed. Typically, under these circumstances, some may fear that Japan is going to raise the rate, and the spread is going to narrow, and there is going to be a rising yen because of the demand for yen, because you have to buy yen and pay it back sell dollars or sell euros and paying back in yen. So there was a trigger that happened coinciding with this. We will cover in the little later part of the story. Now you go to the next slide. Okay, where is it today? Very interesting. The 3-year is now, the yield is narrowed to 2.4. This is as at 12/12, which is Friday. It has narrowed to 2.4%. But at the same time, the yen has appreciated to 155.82. Why? Because they want Yen to be available, they recognize there's a significant rate squeeze because Japan again raised the interest rates. And that's the reason why the 3-year spread is at 2.4%. Now, I haven't shown, but we may have the slide. If I actually look at the current 10-year Japanese yield, it's at 1.9%. So the spread between, this one. See, it's at 1.95%. You see this, the difference between 3 and 10 has come to less than 50 basis points, close to 50 basis points. We're giving this chart basically to tell you around 2000, Japanese yen was 0%, almost close to 0% in 2020. Okay. And now what's happened? This has been rising and rising and rising. And around, it was even at 100 basis points, which was somewhere between 2024 to 2025, there was acceptance that still there's enough spread and there's enough currency discount for people to continue to borrow and invest in risky markets. Okay, so this just tells you the correlation between the rate differential and the discounting of the yen to US dollar and availability of yen in case people kind of dump yen and pay back their loans. When you pay back their loans, what happens? The amount of yen in the market volume of yen goes up quite substantially. This is the reason why the government has given some kind of a fiscal cushion in terms of making sure that it had to buy the debt to fund not only its own balance sheet, but to have liquidity in case yen is getting dumped in the market. Next.
Sridharji, if I could interrupt for a second, please. Viewers, I'm just going to share with you one small thing. Hang on a second. I finally got this thing right. This one. Oh, sorry, got it wrong. 1 second. Never mind. It's not working right. Sorry about that. So let's get back to our presentation. I was trying to show a way to easily subscribe to our channels using the auto subscribe feature that is available on PGuru's app. For some reason, I'm not able to connect it. Never mind. Sir, I'm so sorry about this. I was trying to finish one thought that was started. Why is this not 2008? So this is an important distinction because people keep saying, oh my God, this is there. This is going to lead to the same situation as in 2008. So there are some significant differences. Over to you, Sridharji.
Thank you. It's not a credit crisis. There's no credit. There's no unpaid, there is unpaid loans here in terms of borrowed money. Central Bank of Japan is keeping a close eye on this. And, Shia said Japanese government itself is kind of buying back its bonds while the corporates have taken more US dollars, putting faith in US dollars and also to transact in US. And they've got $1.1 trillion of US 10-year treasuries in their balance sheet. So central bank is keeping a close eye to make sure that there is no what you call instability in the markets. Very important to understand instability in the markets. Markets are also adjusting to higher end funding costs. Why? Because we showed the graph. It's not like abrupt. It didn't go from 2020 to 2021, that big dip of the climb that you saw. It's happened between 2020 and 2025, gone from almost 0% to about 1.97%. So that's happened steadily. People have been kind of, moving things around. It's a currency volatility impact. It impacts only financial markets, not the broader economic system. This is where I set the context. It's about rate differential, it's about the currency, and it's about the loans that people are carrying because there was favorable rate, there was favorable currency appreciation, which allowed them to borrow and invest. So where do people invest with this yen trade? Next slide. Okay.
Sir.
When was the, before we go into when was the last crisis? It happened in August 2024. There was a significant market volatility and a sharp sell-off in early 2024. If you go back to the graph, we don't need to, but you will see that there was an abrupt rise around that time.
Yeah, I can
Yes.
see that.
You can see here.
See the dot. See the dot.
Yeah.
Yeah.
So the story is, so there was a peak and also there was another peak here. But because of this, they were able to weather this. Okay, next slide, the previous slide.
Just 1 second, sir. Yeah.
Yes.
Go ahead, sir.
So significant market volatility and sharp sell-off happened in August 2024. BOJ unexpectedly increased rates, making it costly to borrow in yen by 25 basis points. What did people, they feared that this is going to continue, sell assets to pay loans. So they sold their assets to pay off the loans. What was the market impact on that day? Nikkei plunged 12% in a single day. Nikkei plunged 12% in a single day, and S&P dropped 3% in a day. Okay, now we'll show you what the CNBC reported the next day or on that day. Next slide.
1 second, sir. Yeah.
Yes. How badly the markets read this, and only for analysis to follow to say something different. Okay. So next.
Sir.
Yes. Dow tumbles 1,000 points. S&P tumbles, S&P 500 worst day since 2022 in global market sell-off. And then what does it say? The Dow dropped 2.6% to end. The Nasdaq lost 3.43% tech stocks and closed it, while the S&P 500 slid 3% and ended. The blue chip Dow and S&P 500 registered their biggest daily losses since September 2022. 2022, we had a major crisis. We almost lost 20%, 25%, depending on whether you are Nasdaq or Dow or whether you're S&P. Anyway, Japan's stock market posted its worst day. Wall Street's Black Mondays, they called it since 1987. Yeah, contributing to fears of global turmoil in the markets. And what else they say? Fears of a US recession was the main culprit for the crisis.
Sir, 1 second. What happened is, I think Sachin's computer lost power. So I have it back now. So we can, just give me 1 second, sir. I'll line it up right.
Yeah, I just want people to read, because how the markets read it. They didn't do the analysis. Yes, thank you. So stock market, they said fears of a US recession were the main culprits in the global market meltdown. And typically animal spirits follow everybody else because there is a problem. Actually, there was nothing wrong in the US markets. There was nothing wrong in 2024 with world economy. Most of the markets functioned. You know what happened as the end of 2024. And because of Friday's disappointing jobs report. Investors are concerned that the Federal Reserve is behind the curve in bringing the rates down to bolster an economic slowdown, with central bank choosing instead to keep quiet. This is a battle that happened at that point of time. Lo and behold, after that sell-off, everything normalized as soon as the trade settled, and everything went quiet, because nobody wants to say we were wrong. Okay? They don't want to say,
of course,
they were wrong. Yeah. Okay? So how are the markets gearing up as a result of that? They said, normalized. We made a good chunk of money in 24, and we're going to make a good chunk of money in 2025. It stabilized. Once they understood, there was 1 or 2 people who sold their positions to pay back the yen loan, fearing. Usually you have 1, 2, or 3 large trades that happen. So how are the markets gearing up now? No panic. US dollar likely to be used because there's enough liquidity as a hedge in case the rate further goes up. We gave you already the size of the carry trade, 1 to 2 trillion, no issue. US has liquidity. This is feasible in a sliding interest rate US dollar environment. Remember, US cut on Friday 25 basis points. Okay, whereas Japan increased the rate just recently. There's no shortage of US dollars. When global risk rises, the US dollar often strengthens as it has happened and offsets any potential losses. The current strategy seems to point in that direction. That's why the markets are moving along quite nicely without any interruption. Next Sunday, we will talk about where the interest rate differential is, where the markets are, where the wage growth relative to unemployment is, where you are also going to see this myth that AI is going to collapse and investments going into the Indian market. Okay, India just received, while I know there are a lot of Vladimir Putin, pundits. He went silently. Two big US companies put $50 billion. $50 billion. The total bilateral trade between Russia and India is about $70 billion. $69 billion. $65 billion, India gives it to Russia. $4 billion as a generosity, Russia invests in India. Okay, 50 billion came from US dollars from 2-3 companies. We'll cover that on next Sunday. So there is no major imminent crisis. Central banks are not worried. Japan keeps a close watch for liquidity. The market, US dollar has liquidity in case these borrowers want to, shift those loans into the US dollars, and markets are continuing to function. August 2024 was an aberration, and the markets learned from that. Having said that, you also saw there was a sell-off in Bitcoin, and it contracted by almost 40%. That just simply means somebody had borrowed significant amount of Japanese yen, converted it to US dollars, and put that money. And that's one of the reasons why, you have one of the potential reasons why that collapsed 40% on that day. It's around 85,000 or 86,000 right now. So you can now begin be experts and look at some of these curves and determine, hey, what's causing? Is it an economic hiccup? Is it a tariff, etc.? We'll also show data that the tariffs have not created inflation, as the pundits blew up. And this is probably one of the reasons why Trump is playing hotball with India. Sorry, those are distractions. We'll cover more on next Sunday. But we have now given you the data on yen trade, yen carry trade, and how the markets are kind of reacting. Sriji?
Thank you so much, sir. Viewers, you might wonder, how does this affect me in India? How does this affect me in Malaysia? How does this affect me in United States? How does it affect me in UK? Well, these are all related. See, Japanese currency is fully convertible. So are most of the G7 countries' currencies. So if there's any move anywhere, it immediately reflects in the other places also. Go back to what happened in 1992. When Soros and the current Treasury Secretary, Scott Bessent, shorted the pound, British pound. They made $1 billion out of it. But the whole clue came because Scott Bessent was sitting in London, and he said to Soros, who was the head of the hedge fund, that look, almost all the housing loans that were in prevalence in United Kingdom at that time were all floating rate. Sridharji, floating rate means month to month it will change? The interest rate will change month to month?
Oh, it can month to month, week to week. So yeah, floating rate, it simply implies that if 80% of your loans are sitting on a floating rate versus fixed rate, that means it's linked to the market. So, the interest rate rises or the interest rate drops, they face the interest cost is borne by the customers. Okay, they have to pay. If public has borrowed on a floating rate, then there's a significant economic consequence if the rates rise. So therefore, if when you short a currency, you're going to create gyrations, and the British pound drops because of the uncertainty around what is causing this. Then you buy at that position and everything returns to normal. In 2 days, the currency resets back to its normal position. Depending on the size of your throat, you made a killing.
So to finish the story, what happened was Scott Bessent flags Soros, who's his boss sitting in the hedge fund company in US, that look, United Kingdom has a problem. They are trying to measure up to a currency which is very strong. At that time, Germany was very strong, their economy was very strong, and UK's economy was very weak. So when you try to link up a weak economy with a strong economy, the weak economy always going to have challenges. And Scott Bessent told Soros there is no way the UK can increase its interest rates, because that's one way to try and make it powerful, because then money will come into UK, they'll invest there, and therefore they will prop up the pound. And he said there is no way they can do it because many people have adjustable rate mortgages. That means their mortgage rate might even double if UK raises the interest rates. So what do? We elect that we are going to short the pound. The pound is going to lose value significantly. Then what happens? $10 billion. Soros puts it into this to short the UK pound. And as the pressure increases, this is all, remember, these are all completely, currencies are convertible. So what happens is the pound was having a lot of pressure. They ended up raising the interest rate, but the pound couldn't hold it, and the pound crashed. And the hedge fund company of Soros made $5 billion. $5 billion shorting the UK pound. And the typical dividend for the investor, because it's not Soros's money. People put money into the hedge fund, and Soros is the one who is taking that money and investing it in a place where he can get the maximum return. So his percentage was 20%. 20% of 5 billion is $1 billion. That's where the rascal made the first big money. I bet you he did the same thing in Malaysia also, because Malaysia hates him. In fact, he's, I think, banned from coming to Malaysia or something like that. So very interesting stuff when people try to do these things. You need to be aware of what's going on where. Sir, over to you.
Well, I think that we have given you, what causes turbulence via yen trade, carry trade. And we have answered the question. It is a markets issue. It's not an economic contagion. We have also given one instance of how the markets read it wrong in August 2024. As recently as 1 or 1.5 weeks ago, we saw the crypto kind of take a big hit. Fortunately, the markets didn't panic. They probably sensed it. It's a risk trade. Usually, carry trades are directed at 4 or 5 risk assets. Obviously, much of the appreciation and much of the investments, as you all would have guessed, has happened in the tech, and much of it has also happened in the crypto world. Obviously, emerging markets is another place where they will borrow. They will not take their own capital. If you have a word called floating rate, they have what they call floating capital that goes into the emerging markets. So money goes in and money goes out. And when it goes out, it's not because there's a hidden contagion. You are seeing that it's cheap money, which was borrowed on a rate differential and currency discount, that they need to pay back when there is an appreciation in one of those or both those variables. And that in turn triggers exit from that specific market. And then we have also said that this is contained to one specific currency. So the central bank is very closely involved. So you can watch what's happening in some of these variables like dollar yen, the rate differential, and these types of issues, liquidity of yen, etc. Don't follow animal spirits. Don't think that when something happened most notably in some of the markets which are tied to US dollar, that these things are not because of, there is no indication of economic contagion. There's a lot of Indian, viewers. There's nothing in the Indian economy is doing well. We have already covered that in detail few weeks ago. They're doing very well, despite the tariff situation. US economy is doing very well. We'll answer that question. There's plenty of liquidity. You can see the liquidity moving in the markets. So this is what we wanted to answer to you. Yes, carry trade selling is here, but it's not going to, take you down.
Next one, please. We have some questions now, sir. First question. Namaskaram, sir. Did you see the news from Australia? What are your thoughts? Bondi Beach, there was a shooting. I think the shooter has been identified, and turns out to be no surprise there. This is the first day of Hanukkah. Hanukkah is a Jewish festival. People were vacationing on Bondi Beach. 10 people killed, I think. Maybe 11th one is very serious. That's all I know as of this point. Sir, this is again the same thing, sir, anti-Semitism.
It is. I think that it was 2 people who shot, and randomly, I think close to 21 people were affected. I think 11 or 9, and as you rightly said, 9 or 10 people. The spokesperson or one of the people for the Australian Jewish community was also injured. And I have said this, there should be no surprise. If you haven't, I was for 3 weeks in Australia recently. If you have been in Australia, you can figure it out for yourself how they have deconstructed their demographics, and they'll obviously pay a price.
Next one, please. Are India and Japan working on upgrading a free trade agreement?
Absolutely. Japan is likely to put more money into India, and I think in 3 or 4 sectors. Definitely, auto is one of the sectors. I think steel is another sector. I think they're also going to put in the infrastructure. Obviously, they're continuing to expand their auto footprint in India. Yes, Japan and India is a very strong partnership, long association. Yes.
Next one, please. The question is, there will be no credit squeeze once you carry trade unwinds, resulting in a run on the market?
No, it's basically, dollar yen denominated assets. They will be a sell-off, and yen will be paid back. As a result, specific risk assets that we said to you may get sold off. But it doesn't spread to the whole of the market, and it has nothing to do with the economy. So once people realize the economy is continuing to chug along, and most of the market growth is driven by economic activity rather than these kinds of aberrations in financial markets.
Sridharji, why is the US buying its own T-bonds, around 60 to 65 billion within a month?
No, it's not buying its own T-bonds. These bonds, they're basically
quantitative easing, right? Short-term rate. Yeah.
The rates are coming down. There's one rate cut has been achieved, right? They're potentially not more than 2 rates, but there's maturing loans. There is a debt continually kind of mature. So they got to go back to the market. And remember, guys, there's only less than 10% of the US debt is held by outside people. Between corporate and public, they hold the rest of the debt. So therefore, they're not buying their own bonds. They are selling the bonds to the market. And obviously, one of the safe assets I mentioned to you is US dollar treasuries.
Next question. Ganesh wants to know, any reason for FII outflow from Indian market? Are they waiting for US-India trade deal, which is suggested to be concluded by March 2026? Thank you.
I think we have given a very detailed answer and a presentation. There's a combination of factors. Obviously, the US FTA, US-India FTA, is top of the line. That's number one. And the second one is the outflow. We, looking at the markets, can safely predict that market is just adjusting, possibly as a result of the yen carry trade, and liquidating some positions and taking the money out and paying back the loan, right? So that's about $17 billion. That's the expectation. Also, what is happening is there was also a report, which I can't confirm, but which says that there was a shorting of INR, okay, and there was a fear as a result, where would it go? Until both the Indian Reserve Bank as well as the chief economic advisor came and said, we are not losing sleep. We'll allow the INR to depreciate. We're not going to put precious money. That's what kind of softened. But in the meanwhile, the money had left.
Sridharji, we will pick up our action next Sunday, and as a very, very important topic. Viewers, because this is important, because what you're seeing is the businesses of United States telling the United States government one strong message. And this is what I have been telling. So if you try to crack down on H-1Bs, then the jobs will not be there in the US. The jobs will completely get transported outside of US. And these things are going to create a lot of jobs in India for Indian-based programmers, and there will be some non-Indian also. There are, I know I've seen many foreign people also working in India now, because money is good, why not? And the cost of living is comparatively cheaper. If you are living in Europe compared to your alternatives India, you would definitely take India. You might get a little bit less, but your expenses are a lot less. India is a great place to live, guys, especially cities like Bangalore. Go to Koramangala on a weekend, you will see a totally different picture. I was like, what? This is even more modern than Silicon Valley. Sridhar, honest to God statement, 6 o'clock to 9 o'clock in the evening in Koramangala streets on a weekend, it's a sight to behold, sir. So point I'm trying to make is the lifestyle is good. Same thing with Gurugram. Same thing. Same stuff. So, and I'm sure there are things like that in Hyderabad too, because that's also is coming up quite a bit now. So point I'm trying to make is life is good in India. Those of you who are, thinking, should I not? There may be good opportunities in India. Thank you once again, sir. And we'll touch upon this next week. Namaskar.
Namaskar. Thank you so much. Have a wonderful Sunday and good luck to all of you.